The next and a very important item of adjustment is bad debts. So in question, in trial balance and in the additional information, the items that may appear relating to bad debts are, I have already written, are shown in this board. You see, in the trial balance, maximum items that may appear are these three. Firstly, you may find bad debts on the debit side of trial balance. Then you will find sundry debtors on the debit side of trial balance. And on the credit side, you may find an item as provision for bad debts. What are these items? These bad debts means bad debts of the current year, this year. Sundry debtors means this year's debtors after deduction of this bad debt. That means actually our debtors were 51,000, but because of these bad debts, our debtors have become 50,000. And provision for bad debts means last year we had created a provision, and out of that provision, and that provision was of the amount of rupees 3,000. Okay. And after preparing the trial balance, we find that in the adjustment, the additional bad debt is rupees 2,000. What is this? This means after preparing this trial balance, we came to know that some more debtors or a debtor is not going to pay an amount of rupees 2,000, which has again become a bad debt. So if it has become a bad debt, it will have to be shown in the additional information, and needless to say, it will have two effects. What are the two effects? I will discuss later on. And then we will also create a provision for doubtful debts. This information is given that this year, last year the provision was created, we used it, and the balance is 3,000. And this year the provision for doubtful debts we have to create at the rate of 5%. 5% on debtors. And remember, this debtors means good debtors, not all the debtors. It will be created only on good debtors. Who will be good debtors? The debtors which are not at all doubtful, which are not bad. So from 50,000, you will again deduct this 2,000, and 48,000 rupees will be your good debtors. Okay. So this provision of 5% we will create on how much? We will create on 48,000, 50 minus 2,000. So whatever bit, now with these things in place, just remember the items of trial balance will have only one impact, and the items of adjustments will have double impacts, two impacts, debit and credit. Now, how will they show? Suppose in the question, all these items appear. So how will they show in the financial statements? So regarding the financial statements, just you have to keep a note of these amounts. And what you will do is that you will first do a small calculation as your working note. I'll do it here. Just have a look. You will add three items: bad debts, further or additional bad debts, and new provision. Okay. Bad debts is 1,000. Further bad debt is 2,000. What is further bad debt? This number one. The bad debt we get to know after preparation of the trial balance. And then the new provision, this one. This new provision is 5%. 5% on what? Good debtors. Good debtors means 50,000 minus 2,000. That means 5% of 48,000. That means 2,400. So the total amount is 5,400. Now you will compare this 5,400 with the old provision. The last year's provision is rupees 3,000. It is falling short of 2,400. This 2,400 we are going to take out from current year's profit. Okay, we are going to show it as a charge against profit for the current year. So the simple thing is that we compared the total of these three items with this item. And when we saw that this is more, that means we will need to take out money from this year's profit and loss account. And what will be the impact? First impact will be in the profit and loss account. In the profit and loss account, debit side. Okay, this is the debit side. You will write all the three items that I had added. You will write the heading to provision for doubtful debts. Please write use full forms. I don't have space, and so I'm using the shortcuts. Provision for doubtful debts, and there you will write bad debts, further bad debts, new provision, whatever be the amounts. I had done the calculation. It was 1000 plus 2000 plus 2400. And from this 5400, you will deduct the old provision. Old provision was 3000. And so the net amount of 2400 will appear in the outer column. This is the first effect of these adjustments and of these items taken together. And the next impact will be in balance sheet. So in balance sheet, what you are going to do in balance sheet, in the asset side, from the sundry debtors. Sundry debtors is how much? 50,000. From this sundry debtors, you will deduct two things, these two things that appear in the adjustment. So additional bad debt, that is further bad debt of 2000 you will deduct, and new provision of how much you will deduct? New provision we had calculated 2400, that means 4400 will be deducted, and the remaining balance of rupees 45,600 will appear on the outer column of the balance sheet. And in this way, all the items will be accounted for. Okay. And you can see these items of adjustments have got two impacts. Additional bad debt has come here and also in balance sheet. And what provision for bad debts, that is the new provision, has come here also 2400 and here in balance sheet also. And regarding this bad debts, it has come only once, that is in the profit and loss account debit side. Sundry debtor has come only once in balance sheet asset side. Provision for bad debts 3000 has appeared only once in the profit and loss account debit side as a deduction. So rest these three items have got one single impact and these two items have got double impact. Now in the question, if any of the item is missing, that will not be written, rest things will be written in place. Okay, for example, if there is no further bad debt, additional bad debt, then in this calculation we will not write further bad debt, rest things will remain the same. And also it will not be shown as a deduction from debtors, that's it. Now there is a twist in the story. If the amount of old provision exceeds the total of these three amounts, that means suppose this year bad debts, further bad debts and new provision, that means our total requirement is 5400, and suppose last year the provision was rupees 6000, that means this year's requirement plus this year's new provision amount, total 5400 is the amount of 6000 is sufficient to meet that requirement. So, and still after meeting that, we will have rupees 600 surplus with us, right? So instead of showing it on the debit side as an expense, we will show, in that case, we will show it in the profit and loss account. Credit side, this is the credit side, debit side I'm not showing. What you will do here, you will show here, first you will write by provision for bad debt, this will be your heading. Then you will first write old provision. How much? 6000. From this you will deduct bad debts 1000, deduct further bad debts 2000, deduct new provision how much? 2400. That means 5400, and finally what will go in the outer column? 600. That means still we have a surplus of rupees 600. And then balance sheet, in balance sheet same thing will happen, that is further bad debt and new provision will be deducted from the sundry debtors. So this is it, dear students. Please, if you have any doubts, you can call me, you can send me a message and get it clarified. This thing was taught to you in HS first year also, but still I have tried to explain it in detail so that you don't have any doubts left. And one more thing, in sometimes in question there's nothing may be there. These all items, only there will be sundry debtors. Okay, there will be sundry, suppose sundry debtors 50,000. And there is provision for bad debt 6,000. That means indirectly it will imply that this year also you have to create a provision of rupees 6,000. As such, you will have to show it in your financial statements. And because it appears in the, so in such case, what will happen is that old provision will be treated as the new provision, and since no amount has been transferred from the profit and loss account of the current year, so nothing will be shown in the profit and loss account. Instead, the amount of old provision will be shown as new provision. The amount of old provision will also be taken as new provision and will be only shown as a deduction from the sundry debtors in the balance sheet. That's it. Thank you, dear students.